Ladies and gentlemen, welcome back to the channel. We are wrapping up trading day of November 16th. Now, AMC stock performed very well today, believe that or not, on the one red day that we have seen in a while now. AMC was not all that bad relative to how the indexes performed. We will talk about that here in this video, but I do want to go over the Ortex data, everything you guys need to know, an updated look at where we are with the Stocko tracker data, and specifically those cost to borrow rates, because now all of the sudden there is some shares that can be lent out after we have seen a dry streak for the last couple of days. And I want to put on my tinfoil hat and let you guys know my theory on why just all the shares in AMC basically dried up and now there is shares available to be traded in a decent quantity. So I think you guys will get a kicker out of that. Might be right, might be wrong. Not necessarily the point of, just putting out that information. I think is powerful in and of itself, sharing different opinions. Now, nonetheless, you are seeing Nvidia earnings coming out here in after hours. We are going to talk about this because it is sending the markets up a little bit here in after hours, but the earnings were not so good. So I do want to give you guys a bit of a warning in that regard. And we are also seeing renewed Fed speak, and Fed Wallard, he was pretty damn hawkish today in what he had to say. So we're going to get into all of that information. Hit that like button and subscribe to the channel if you guys have not already. And let's get into it, guys. First things first with Nvidia earnings. And why Nvidia is important is, like this article says right here, Nvidia is closely watched by analysts and investors as a leading indicator for the health of the technology industry because it sells chips and software to so many PC makers and cloud providers. Why I specifically am talking about Nvidia is because it is making everything in after hours start to rally a bit, and AMC, while it can rally when the markets are down, and those days can be some of the most ferocious, most volatile days to the upside, what we've seen over the past couple of trading days is a broad market rally, and AMC thus well outperforming the broad market rally. So if Nvidia is a reason for investors to latch onto to continue to be bullish, I think AMC is going to be that much more bullish continuing into the future than the markets are. So long story short, Nvidia will be important, at least for tomorrow. How their earnings call does go, it will be starting here very shortly, probably happening by the time you guys are watching this video, and you kind of want to watch the stock and see how it moves. Nonetheless, the EPS came in well under expectations at 0.59 cents, so 59 cents adjusted versus 69 cents expected. Revenue did beat by a decent amount. 5.93 billion was the revenue number versus 5.77 billion expected. They did lower their fourth quarter guidance. Experts analysis was expecting 6.09 billion for sales. Nvidia said it expected about 6 billion in sales for the fourth quarter. So like I said, a little bit lower than expectations, and the actual gross profit did go down as well due to obviously things that are going on in China. So what we're looking at as of right now is a real 50-50 kind of scenario. Nvidia could really rally 5 to 10% tomorrow or go down 5 to 10% tomorrow. I'm more skewed to a negative reaction, and you kind of are seeing this slow and steady decline ever since that first pop. So watch that heading into tomorrow, and like I said, with the earnings call. Now, AMC, why I said the stock performed very well today is because you did bottom out at $7.16 per share. That was right on the 50-day moving average to a literal T, and then look how much you retraced back to the upside, making today's down move only down about 5.28%. At one point, the stock was down over 10%. This is confirming to me that the bullish rally will hold up on the back end of this whenever the markets do start to look a little bit more bullish. And the fact we held above the 50-day moving average, typically when that happens, you tend to get a massive breakout of the stock. And you can go back in history and look at, what the relationship is with the 50-day moving average. But every time this happens, you break out to a higher level. Look at back here in March. You broke above the 50-day moving average, found support there, rallied aggressively from the adjusted price of $10 per share all the way up to $22 per share. Same thing back here in August. You broke out above the 50-day moving average. You held this level. You've seen a decent rally from about $7 all the way up to about $11.50 per share. Came back down to the 50-day moving average, found support, rallied from there all the way back up to about $17 per share. So typically when this happens, you do look at over a 100% gainer, and that is if we can continue to hold the 50-day moving average, in which the strength we've seen today surely looks like we will. So this day today actually makes me that much more bullish on AMC heading into the next couple of trading days, if not the next couple of weeks. Now, let's dive into some of the Fed talk that we did get today. Now, Fed Waller was the key. He really did send the markets down in a pretty big way when he was speaking, because he was so hawkish. But this article says Fed Waller says he's open to a half-point rate hike at December meeting. This is really a given from the Fed. All Fed members basically are saying this, but it's the context of, not how fast we're going at this point, but how high we're going to go and how long we are going to sit there. So, which is known as the terminal rate, if you guys are a little bit confused whenever you hear that word terminal rate. All it means is where they stop raising rates, not necessarily where they cut rates or anything. That's where they're going to stop raising rates and just hold that rate there. That's what the markets are trying to figure out right now. Is it 5%? 5.5%? Is it 6% or higher than that? That's the difference between, the markets going down in a big way or continuing on this rally. Now, as far as the key points, Federal Reserve Governor Christopher Waller said Wednesday he's open to reducing the level of interest rate increases to a 0.5 percentage point in December. Quote, "But I won't be making a judgment about that until I see more data," he said at a speech in Phoenix, where he also vowed not to be head faked by an encouraging inflation report last week. And that was the part that was really hawkish, saying that he needs to see a lot more data between now and the next Fed meeting to get essentially comfortable with that 50 basis point rate hike. So that is basically that. Another story that is coming out as well is Sam Bankman-Fried wanted to let retail investors borrow money to trade crypto derivatives. Sam Bankman-Fried was lobbying the Commodity Futures Trading Commission to back him on a product for retail traders that was built on leverage. CFTC Chairman Rostin Binam told CNBC that Bankman-Fried had been trying to convince regulators for almost a year to let him introduce a derivatives product that would allow trades with borrowed money. That is the biggest no-no in the world, unless you have assets to back that up in a considerable way, in which you can see FTX does not. And that is still a big problem that is going to plague this markets for a while, and especially crypto. Could even be years, guys. People just don't know how bad the filtration is essentially with the losses in crypto. What hedge funds are exposed to which crypto exchanges? Which are going to be the next exchanges to go bust? How are the banks involved in this? How are billionaires involved with this? Trading firms? Is Robinhood neck deep in bullshit? You don't know until it essentially comes out, and then by then it is too late. So keep in mind, all of those headlines will be important and will pertain directly to the markets and how the markets are going to move, guys. And nonetheless, let's talk about AMC specifically. What is happening today in the options market? This is the thing that I'm really paying the closest attention to, because this is what is going to fuel the end of the week rally, in my opinion. And as of right now, if we go ahead and refresh this page, you can see about 45,000 calls that are currently in the money and 189,000 calls that are out of the money. This is, a 3-to-1 ratio, more than a 3-to-1 ratio. So there's a lot more calls out the money than in the money. And thankfully for us, as you know, if you watch this channel, they are really concentrated in between the $8 and the $10 strike. And then from there, from the $10 strike to the $15 $15 strike. That's where you're getting a lot of the open interest. That's where you're going to get a lot of the momentum if we can start to break out above $8 per share. That is really the threshold that I want to see by the end of this week. If it does not happen, it's going to be a little bit tricky to get that gamma squeeze, but we are seeing a lot of intraday activity on the options that could help to fuel us, even if a gamma squeeze somehow miraculously did not form itself this week. And why I say miraculously is because when you look at these numbers and you look at the actual break evens here, I mean, you don't have to see a big move up at all to start to get that gamma squeeze in a very big way, like 28,500 calls that are for open interest at the $8 strike, 17,000, 15,000, 5,000, 21,000, and virtually all the way to the $15 strike, you have a couple thousand on every single strike, and then at the $15 strike, you have 27,000 for open interest. So I find it very hard to believe that we have seen this much bullish momentum, and it's just going to get stopped out at $8 per share before you see a lot of those options go into the money. Like, throughout this whole rally, from $5 to $8 and some change in pre-market today, I mean, the most for open interest on this whole entire options chain so far that is winning the money is the 7 and the 750 strikes, and they only have about 13,000 for open interest a piece. You're over double that at the $8 strike. You're 5,000 more than that at the 850. You're 1,000 more than that at the 9. You're, double that at the 10. So I just find it a little hard to believe that there's going to be enough shorting pressure that is willing to go into this market in a bullish market and go short AMC and put their neck out on the line. I find it hard to believe. Now, we'll see what happens with that, but in the meantime, you definitely want to stay up to date with the Ortex data because we are starting to see some shares that are available to be lent out, and personally, I think it might be some of these crypto exchanges that are trying to salvage what they can, because after all, if you were to go to a dark market anywhere and try to essentially raise some free money, what better way to do that than a stock like AMC that is already involved with all kinds of manipulation? You could, in theory, literally just you have this many shares in your actual account. You've never seen a real share before. And that's how you can start to get, fraudulent behavior in crypto markets. You can essentially fake own shares. You are not trading anything. So if these exchanges, which brokerage exchanges, have the capability to put some bullshit numbers up there and essentially do whatever they want, they get a lot of trust for whatever reason from the global investing community. Essentially, I do think they are offering these fake shares for other hedge funds to sell short that, quite honestly, don't exist. And it's like naked shorting, right? How do you think they just naked shorted all these stocks before 2008, before it was, a federal crime to do so? It was just numbers on a screen. They just, sold short, never had to buy back. That is what I think is essentially going on right now. And I do think some of these crypto brokerages might be to play here. And it's simply due to the volume of shares that all of a sudden is able to be sold short. 300,000 shares right here, then it goes to zero. Somebody obviously took those shares out and sold them short today. And then you're getting 200,000 shares 3 times, and then you're getting 150,000 shares twice. I think that is no coincidence that you're getting more fears about brokerage exchange going bust, and then you're seeing amounts of shares that are willing to be sold short in numbers that you have not seen in literal weeks, guys. You got to go back to November 4th to get this amount of shares that are sold short, but it was at a much smaller cost to borrow rate. So that's my tinfoil hat theory. I don't know if that is right. Don't know if it is wrong. It obviously wouldn't surprise me at this point if that is what is going on. Just connecting the dots here. It doesn't take a genius to come up with that theory, but it just clicked, and I think it makes a little bit of sense. Let me know down below in the comment section what your theory is on this as well, because you got to go back to November 4th. You got to go back, 12 days, not even, 12 trading days ago to get this amount of shares that are willing to be sold short. And the market dynamic has changed a lot since then. The markets went from super bearish at that point in time. Anyone's gonna, lend out their stock to now, we're in a totally different market environment, and that's something that also does not make too much sense. Now, as far as the cost of borrow rates that we are currently seeing, cost of borrow max sitting at 129.5%, cost of borrow average at 54.14%, and cost of borrow minimum at 6.56%. You also have, with the shares that are available to be lent out, 150,000 as of currently, with a cost of borrow rate at about 66.5%. Guys, live short interest sitting at 20.11%, looking like some small shorts covered on their short positions, just like we had talked about over the last couple of days, but nothing substantial at all. Less than 1 million shares in total that have actually been covered. And you're still sitting at 103.68 million legal shares that are sold short, let alone all the manipulation and all of the fake shares that would still need to be returned to you. I imagine we are the buyers of those fake shares. We would still be owed our money or equivalent value in shares. Nonetheless, that is going to be it for this video. Hit that like button and subscribe to the channel if you guys learned anything. If you guys like these kind of videos, whatever your reasoning is, hit that like button. It might help you make a little bit of money. And if you guys want to come trade with me live in real time as well, link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.